Hi everyone, welcome back to our Tax Talk Show. Again, my name is LaForest, and I am happy to be with you today. Last time we discussed the filing statuses. By now, you guys know there are 5 filing statuses. We have single, married filing jointly, married filing separately, head of household, and qualifying widow or qualifying widower. So, but today I want to take the time to expand a little bit on some of those statuses. So today I'm going to talk about the married filing separately, and on a separate segment, we'll talk about the head of household filing status. So we know that if you file married filing separately, there could be some issues that you lose a lot of credit. But we also say that there are some people who, despite all the credit that they might lose, they choose to file married filing separately anyway. And sometimes married filing separately could be an advantage over married filing jointly. So now we're gonna dig a little deeper. We're going to try to address married filing separately, what it is, why some people choose to file married filing separately, and who should not really worry that much about the credits that they may potentially lose. So we say that one of the reason is we talked about some people would file married filing separately to avoid liability. So when you file a tax together with your spouse, you file married filing jointly. So you are jointly and severally liable for everything that's on the tax return. So we're going to define those two terms. We say joint liability, meaning together, both you and your spouse, you are responsible for any liability, any problem, any issue that's on the tax return. And several liability. So we see the word several, sever, cut it separately. So when several liability simply means that each taxpayer, each spouse on the return is also fully 100% liable for everything that's on the tax return. So there might be something that is attributable to your spouse, but yet you also liable for that problem. So for example, you have a spouse that probably have a student loan debt that they didn't pay, and now they owe the government, and because they're not making payments on their student debt, so all of a sudden all your refund is seized by the IRS. You have spouses with child support obligations or state obligation. So one spouse has the issue, but both spouses end up paying the price for it. So if you are one of the taxpayers, if let's say for example, if that happened and you one of our clients here, so what we do for our clients, so if it's for child support obligation, student debt loan, something that has to do with only one spouse and not with the other, we help our clients file for what we call an injured spouse relief, where they get to claim their half or their portion of the tax return. So let's say the refund is $8,000. So we have a case where the IRS would split it in half. They keep $4,000 and they give the other $4,000 to the other spouse that is injured by the affairs or the problems of the other spouse. And you have another case where, let's say one spouse has certain things on his return that are not kosher. For example, one spouse underreported his income. There are so many things that is wrong, or they take positions with the accountant and the spouse. They take positions on the return that cannot be substantiated. So now all of a sudden you have big problem where you could be besides the audit, you could be investigated for fraud. There's so many things that could happen. But in a case like this, again, if it happens to one of our clients, we could also help them file for what we call an innocent spouse relief, because one spouse did not know what the other spouse was doing. So again, one of the main reason why people file married filing jointly, it's to avoid to have to carry liability for something that one spouse does that has nothing to do with them or they were not aware of. The other thing is, the other main reason is, I will even not really define it. We'll give it a title. The other reason is it doesn't matter. So we say that to claim certain credits, there are income limits. There's like a threshold. Once you go over that limit, so you will not get those credits. For example, we say for earned income credit for 2020. So if your income together, the combined income, if it's more than 56,844, even if you have 3 children, so you get 0 earned income credit. So for 3 children or more at 56,844, you get 0 earned income credit. Now, let's say each spouse individually makes more than that amount. So even if together they make more than 56, it would not matter. It doesn't matter anymore. They're not going to get earned income credit. So if your issue why you were filing together is to get the earned income credit and you know you're not going to get it, then it doesn't matter. So there's also education credit. There are income limit. For example, to claim the American Opportunity Credit. So your income's gotta be, if you are single, under 80,000 but we say to get the full credit, it's gotta be under 80,000. To get a partial credit, it's gotta be between 80 and 90. And if you married, if the income is at 160,000, if it's 160, you cannot get the full credit. And between 160 and 180, you get partial credit, and over 180, then you lose the credit. Your credit is 0. Now, education opportunity credit is a good credit. Now, the thing is, you could get up to $2,500 per each person that's on the return, depending on which credit you're claiming, whether you're claiming education opportunity credit, and if it's a lifetime learning credit, it could be up to $2,000. Now, the thing is, we already discussed the limits. We say if it's over 160, you're not gonna get the full credit. If it's over $180,000, you get 0 credit. Now, again, so if your income is over 180,000, you know you're not gonna get the credit, then it doesn't matter. Same thing for a lifetime learning credit. If the income is over 156,000, so then you get 136. I'm sorry, then you get 0 credit. So for lifetime learning credit, it's between 68,000. Per person, 58 and 68. So meaning if you are filing married, so it starts going down. You start losing part of that credit after 116,000, and you get $0 credit after 136,000. So if together you guys earn more than 136,000, you get 0 credit. Then it doesn't matter if you file married filing jointly or married filing separately, because you're not going to get the credit. If you file married filing jointly, you have over that amount, you get 0 credit. And if you file married filing separately, you automatically disqualified to claim the credit, then it doesn't matter. So these are some of the reasons why people would file married filing separately. So now, even though you could file married filing separately, we have some other considerations. It's not just about the credits. There are some other things that you need to take into consideration. Number one, it's filing requirement. We say filing requirement, if somebody makes more than the standard deduction for the year, then you are required to file a tax return. Otherwise, if you make less than that amount, you don't have to file. For example, if you have a part-time job and you made $12,000, so do you have to file taxes? No, you don't have to file taxes. But would you file taxes? Of course you would, because with $12,000, you probably paid some taxes that you will get a refund. And also because of the income, because it's low, you're going to get a little earned income credit for people who did not make over a certain amount. You would file. But if they took no money from your taxes, if you didn't pay any taxes at all from your pay stub, and also you're under 25 or over 65, you would not get the earned income credit. So it doesn't matter. You would say, you know what? I don't have to go file my taxes and pay somebody 100 or 150, whatever they charge you, to file taxes when I'm not getting anything. Now, but if you are married filing separately and you live together with your spouse in the same house, then your standard deduction is standard deduction. It's not like you have to make more than $12,400. So now the limit is $5. If you make more than $5, you are required to file. So that's a big difference. So now you have to file. So of course, there's implication as to whether you're gonna get a refund or you're gonna pay taxes because now you file married filing separately. The other issue is something that's very important. If you are filing married, if you're gonna file your return separately, you have to make sure if you are in good speaking terms with your spouse or with your spouse, because technically that's still your spouse, you're not divorced yet. That's why you're filing separately. You need to find out how they're going to file their taxes. Are they going to claim standard deduction or itemized deductions? Because if your spouse itemizes on his return, you must also itemize, because if your spouse itemizes on the return, your standard deduction that was $12,400 now is zero. You have zero standard deduction. You must also itemize. Are you gonna get enough stuff to put on your return to go over that $12,400? I don't know. That's something that you would know, whether you have a house, whether you have other things, you have medical bills, whether you pay taxes. Let me give you an example. Very simple. Let's say you work. You earn about $23,000 for the year. So if you are filing married separately and you guys are not going to itemize deductions, so your standard deduction is $12,400. So now your taxable income is $10,600. If you go to irs.gov and you type in tax table, you look at the tax table. For somebody who makes that kind of money, if your taxable income is $10,600, the taxes on that is $1,072. So if you paid, let's say, $2,000 in your return to federal, then you're gonna get a refund for $928. But if you have the same amount and you file married filing separately, your spouse itemizes on his return, now your standard deduction is zero. So now your whole income become taxable income if you don't have things that you can itemize on your return. So this is one of the reasons that sometimes it's not to your advantage to file married filing separately, but also there are people who have reasons to file even certain things where there's an income limit. For married filing separately, they let you go up to $200,000, but married filing jointly, it's $250,000. So sometimes it might be better to not be married. I'm not asking anyone to go divorce your spouse, but I'm just saying sometimes there might be an advantage. So this is what we needed to discuss today about married filing separately. So next time when I see you guys, we're gonna discuss head of household status. It's very important. Also, I'm glad that I mentioned that just before I go. So we have people who are married, they live in the same house with their spouse, and they file married filing jointly every year. They go to a preparer and they say, oh no, I'm going to you're gonna file separately from your spouse. You don't understand the implication. You just think that, okay, it's okay to file two separate returns. It is not okay. You can file two separate returns, but you have to say you're married filing separately, because what some preparers, with unethical or unscrupulous preparers do, they make one person, if you have children, they split the children. One person gets a few kids, another one gets one, and they file head of household for each one of them. So it's not good if the IRS finds out, if they audit your return. Not only will you have to pay that money back with interest, and because depending on how much the difference is between what you were supposed to get and what you get, you will have another penalty called substantial undervalue, where you may have to pay up to 75% of that amount on top of what you're supposed to pay. So you have to be careful, because most of these people, the reason why they do it is because it's to their advantage. They're not really looking out for you, because by making you file two separate returns, they get to pay twice, because they're not filing just one return. They get paid on your husband's return or your wife's return, and they get paid on the other return. So you have to be careful. Now that I've given you enough knowledge about married filing jointly, married filing separately, so just now when you know, you're in a position to tell them, okay, this is my filing status, and if they tell you otherwise, you walk away. Once again, it was a pleasure being with you today. So next segment, we'll talk about head of household filing status. Until then, goodbye, enjoy, and if you haven't filed your tax return yet, happy tax season. Thank you.